And we now welcome on board Satyanarayana Chava, the founder and CEO at Laurus Labs, and find out what's happening in their company. Mr. Chava, great to have you on the show. CDMO has delivered strong growth in first half for you with a robust project pipeline as well. Tell me what gives you confidence in sustaining this kind of momentum in second half as well and over the next 2 to 3 years. How is it that you see a conversion from pipeline to commercial scale?
Business in CDMO space is gestation-wise much longer than the generic API space. Since we already have relationship with big pharma and also have projects in the pipeline at various stages of development and clinical phase, unless we have a clear visibility what product, which customer and how much to make, we cannot have any revenue coming in the next, not only 6 months, in the next 1 year also. So for the rest of the financial year, we have a good visibility about what programs we are handling and what kind of revenue we are going to generate in the CDMO space. So as we mentioned in our previous calls, we are comfortable in achieving whatever we said in CDMO space.
And with 110 plus active CDMO programs across human, animal health, what is the expected success rate and commercialization timeline for these projects?
It is difficult to predict the timeline and success rate, but some of the molecules are already commercialized, APIs, and some advanced intermediates also commercialized. Several programs are in phase 3 validation batches. The revenue coming in the next 6 to 12 months, I would say we have very good visibility, as I mentioned earlier. Number of projects may not give you absolute value how much we are going to derive. The reason for that is some molecules may give 1 million, some molecules may give $100,000. Some projects may give tens of millions of dollars. So the advantage what we have is the current important molecules what Laurus is handling are complex in nature, multi-step synthesis, and also large volume. So we are very comfortable in handling the current set of projects. See, all of them are not very large volume, all of them are not high value, but we have a right mix of projects in mid to late stage and commercial.
Right, okay. But Mr. Chava, Laurus is now expanding into ADC, fermentation, gene therapy capabilities. What is the revenue potential from these over the medium term?
I can give some color around the cell and gene therapy initiatives what we're doing. We don't expect any revenues coming from this cell and gene therapy and ADCs in the next 2 to 3 years. This is only seeding what we're doing, building talent and building pilot capabilities to do viral vectors and also bioconjugation of peptides and antibodies. So we don't expect any revenues from this. Whereas in fermentation, we are investing in fermentation because we see a lot of opportunities through our Laurus Bio. And there we see significant growth possibilities in FY28 onwards, because we are doubling our capacity, not doubling, a tripling capacity. By end of next year, we'll have 600,000 liters of fermentation capacity. Currently, we have 200,000. So FY28 will be very meaningful for our fermentation side of the business. Whereas cell and gene therapy ADCs, we still at the investment phase. We don't expect any meaningful revenue coming from that FY27, 28, 29.
And the ARV business has shown strong growth, or rather strong recovery. How sustainable is this kind of growth stroke recovery?
we always describe the state of our real business uh, is stable, I would say. And if at all there is any variation, it will be very small. We may grow small, and our decline may be very small. So we are at 2,500 crores plus or minus 200 range, and we expect that trend will continue this year and next year. The one reason is there is no therapy change in the near future, near to mid term. So we expect the current treatment guidelines will continue, and we have very good capacity to treat maybe 10, 12 million patients per year.
Right. And Mr. Chava, how is it that you see the company positioned in the next 3 to 5 years as a diversified pharma player or a CDMO-led platform focused on complex modalities?
Right now, about little over 30% of revenue coming from our CDMO. And by 2030, we expect that we go to 50% CDMO. And our CDMO is also very diversified if you look at. We have presence in fermentation, we have presence in animal health, we have presence in crop sciences and dietary supplements. So our CDMO space is well diversified, and we expect that will contribute half of our revenue by.
Right, Mr. Chava, so great to have you on the show. Great to be speaking with you. Right now, of course, the stock is lower, about 6